What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. Now, considering I've already done this once for about 40 minutes just talking to myself, I'm going to go ahead and pull this up and do this all again. So hopefully you guys can actually see this a little bit more clearly as well. I know in the last video, I think this was kind of shrunk a little bit too much. Nobody could really see anything here, but nonetheless, let's go over the past week. The past week, we had a very, very big week. We got a lot of information, and we are digesting all of that information right now. Now, on Tuesday, we had core. Core came in below expectations. Expectations were at 7.3. We came in at 7.1. Great. That inflation is actually starting to really come down. That was a great first sign to see. We got a little bit of hopium there. And then we had Wednesday. Wednesday, we had monetary policy. 50-point basis move came in aligned, exactly what we were expecting, 50-point basis move. But then it was followed up by a Powell. Now, Powell going to lay it down and tell people how it is. And he has been very transparent about this whole process. The market is trying, this is the problem, is everybody is trying to think they're going to price everything in. You can't price everything in. There are some things that you just don't know until you get actual numbers. And the Fed came in and essentially laid down the law. They said that unemployment rates are going, we haven't even seen the worst of unemployment. Which makes sense because we've been talking about people on severance packages, and once they roll off, you're going to see true numbers there, because as long as they are on severance packages, they look like they are employed. And then the shocker, which I'm not really sure why the market was so shocked, because the Fed have been talking about holding rates an extended period of time for a while. Once they feel like rates are set at a certain point, that things would stay at that point for a while. And what you're seeing is they essentially said that there is not going to be a pivot until 2024. That absolutely wrecked the market. We can read into whatever else Powell said about positivity and whatever, but the truth is there will be no pivot until 2024. And that's why we're seeing massive selling over the last 2 days, because people thought that once the Fed hit 50-point basis move, there's going to be a pivot. And that's just not the case. That's not what they are advertising. And so all these other media outlets and everything else have been telling you that, no, we're going to pivot. We're just going to come right back up. Administration is also guilty of this, about a soft landing. It's not going to happen. That's not the way this works. The Fed can't just turn and pivot because they're going to absolutely wreck the market. Right? They're wrecking the market because they're raising rates at a rapid pace. So nonetheless, that's kind of the overview of what's happening. We got the framework for 2023. Expect a lot of unemployment, for the next couple of years, and expect no pivot next year at all. The rates will remain high. And we're seeing, and something we talk about on this channel all the time, about what rates are doing to the economy. Companies have to trim fat. Companies are having to run on skeleton crews because of the fact that they can't afford it. They're trying to remain profitable. If they want to stay in business, they have to trim fat. So you're getting massive layoffs and continue to get massive layoffs until this thing could get sorted out. And that is really until the Fed does pivot, and that's not going to be for a while. And understand the things that we've talked about too to this point is that people accumulated a lot of assets through the pandemic. And you're seeing reports, especially collectibles items, paying ridiculous prices for a lot of collectibles you've seen over the past year. And now people are selling those collectibles for fractions of what they were. So, there's stories of baseball cards even going for millions of dollars, selling for $400,000, right? and so people are liquidating and get whatever money they can back is what they're doing. And what you're seeing and understand is that yes, saving rates are at 2.3. They're at the lowest, essentially the second lowest they've been in history. And so everybody's liquidating assets, liquidating collectibles, but you have to understand the biggest asset people have, the vast majority of people have, is their homes. We've already talked about the HELOCs, taking loans against your houses. People are trying to increase the equity in their home so they can sell it for more. But you have to understand that you've just wiped out a big pool of people because of rates being so high. So after people are done liquidating any other asset they can aside from their home, they're going to start liquidating their homes. And then this is just going to drive even more demand into the rental units and keep causing that to increase. And then understand once people, people are only going to get a fraction of what they expected from their homes. They missed peak. If you haven't sold by now, you've essentially missed peak, in my opinion. And what's going to happen is these housing prices are going to continue to come down. People are going to have to sell fractions. So hopefully it doesn't put people underwater. Right now, a lot of people are underwater, especially with these HELOCs and everything. And so this is the crisis I've been talking about, and something that is going to take time to play out. And the timing on this is really hard to say, again, because we don't know the assets that everybody's holding. Savings rates, that's great, but people, I think people were smart this time around, and they try to invest in those things. But the problem is that those investments, everybody's trying to liquidate at the same time. Right. This is also the same issue why banks have to be backed, because if everybody went to the bank and tried to liquidate all their money, the whole financial system would crash. It's the same thing playing out with assets right now. And this is what's happening. If people are trying to liquidate homes, you're going to be totally screwed. And there's going to be too much supply, not enough demand, because nobody can afford it. And so again, I think this is all potentially going to play out between spring and summertime, sometime next year. Again, it really just depends from that point. But being said, what we're looking forward to is in the next 2 weeks, there's not going to be a lot of volume. You have to understand that. Institutions may try to take advantage of that. We kind of saw that a little bit during Thanksgiving. So that might happen. Right now, we're still getting through digestion, so we might have a couple more days of selling, but we have to see there. And so this Friday, we do have core PCE. We have to understand that all data now, again, is going to be very extremely sensitive again, especially non-farms. People want to know what's going on with the consumer. Again, if there is no demand, right, there is no market. So that's the concern right now. And we're having destruction of man as we speak, and it's getting worse and worse. Upcoming events. So these are all the monetary policies for 2023. So our next one won't be till February, and then March, June. So we'll see what happens there. Again, February, March, and June, I think, are potentially the last increases. And then from that point, I think it's just going to be flat for the remainder of the year. And then we'll, again, this time next year, we'll be able to determine what 2024 will look like. So another big event this week is FedEx this week. Something, they gave us the warning shot. If you didn't listen a couple months back, last quarter, they told us when they actually got demolished. Again, this is the lifeblood of essentially the American economy. They absolutely got wrecked, and they removed forward guidance, and they were expecting things to get a lot worse. We have them on Tuesday. They're going to tell you what is about ready to happen again. And if you can't take that warning shot, that signal, you're going to miss out, right? There's certain things you should be paying attention to, and not the headline news or some reports. Earnings are important. Specific earnings for specific companies are very important. FedEx being one of them. And so that is extremely important to see what comes of FedEx on Tuesday. So I'll be definitely watching that this week. As you can see, as far as numbers this week, things have dialed back quite a bit. If I could talk, SPX is come way down from 117 last week to back to 87. This isn't normal. It's still a little elevated. I think just because of the whole big pivotal week we just had or just coming off of. So that is still a little bit elevated, but you can see how the market makers try to essentially screw people with options, right? Because I even noticed that this week is they were adjusting option rates by $1 first thing in the morning on a lot of different puts and stuff. So they are still a little elevated here coming into this week, but it is vastly diminished. Tesla sitting at 11. I think there could be a lot more selling there. Apple, I've added Apple because Tesla is a stock that, with everything going on with Elon, it is not looking good in the short term for Tesla. I think it will get better. Again, going there, I'll talk about that more, but I think his successor is coming in. And when that happens, I think Tesla will regain some of its major losses once they remove Elon from that situation. And I think that's what he's doing because he's been selling massive shares over the past week. So BA is still very high again, and banks are still very high. The problem with these value and financials, again, have been holding the market throughout the year to any kind of positive upside. But the problem is that they are very, very, very overextended. And haven't retested any old resistance. And so now you're dealing with the potential fall of that and could lead to even a big move to the downside because right now they're holding up because of these rate increases that are supposed to bring more profit. But if it's bringing more profit to the banks, right, and understand that the high rates are essentially the rates in which the banks can borrow from one another, and understand that that's what's going on there. And that's also not good. So, yeah, it's looking. 2023 is not looking good at all, and so we've seen that over the past week. So we'll see. That's pretty much what I got for this. I think a lot of the different things we've talked about. We've talked about the savings rates. We've talked about FedEx. We've talked about the whole housing industry and where that sits at, and we have to be very mindful of that. And that is the next thing. That's the last asset the consumer has, and when they liquidate it, how much cash are they getting from it? Where are they sitting with the job front? The jobs are going to get worse. There's going to be less and less more jobs. So this is the problem. Liquidation, and then we see what happens, right? A lot of people bought extravagant things too, they're selling cars, collectibles, whatever the case is, all those things, try to resell that stuff. They can try to price gouge right now, but in another quarter or two, things are going to be extremely discounted. So just be mindful of that. And this is why I have this channel, to take advantage of that situation, not to take advantage of people's situation. I feel bad for the families and stuff that get affected by this, but this is where you pull away and people gain wealth. These are the opportunities to become wealthy. And so these are the times you take advantage of it, to position yourself in a much better place. And generational wealth and stuff comes from times like this, and to rise and be able to work the extra hours and be able to get the extra cash flow and the extra powder to be DCAing and whatever you have to do during this time, and focus on just building. This is the time to build, and you have to look at the positive side of it. And this is the positive time to do that. If you are building now, sustain yourself now and accumulate as much as possible without putting yourself at risk, this is the time to do it. So again, SPX coming into this week, our big support here is a 37.54. I think we'll see that retesting at some point. Again, I'm actually looking for a good setup to the downside this coming week. I'm looking for some sort of pop up to the 3,900, roughly 3,920, and then potentially another leg back down coming into this week. So that's what I'm kind of watching there. Bulls, again, you need to reclaim the 3,920. That daily needs to open above that and start pushing up. Again, there's a lot of resistance. That's why we got a lot of this bouncing around here. All our monthlies, our dailies, our weekly supports are all congested right in here, and so we've been bouncing around there for a while, almost a whole month here, pretty much just back and forth until we got this pivotal week that we just got, and so um, again, I think we'll see a little bit more downside here. Digestion, it depends on how earnings does, but we got support at the 3,700. Would not be surprised if we revisit during this month, if we revisit or this essentially these red lines are for options. So when you talk about option expirations, that we just had as a quad witching, so that lined up on Friday, and so the next option expiration is in January 20th. So Monday to January 20th is typically when people buy options at the beginning of the month, and then they essentially sell them all towards the end of the month. So not all the time, it just depends, but normally obviously you have more option expirations during that time before you roll into the back half. So it all just depends. Again, there's sometimes people buy a couple. Okay, they buy by quarters, or they buy 6 months or a year or leaps, whatever the case is. But there was a lot of extra sell pressure on Friday. So nonetheless, I'm looking for the retest at the 39 and potentially start selling. That's really what we're watching for SPX. Bitcoin, again, there's a lot of rumors coming from Binance. If Binance is another black swan, crypto is going to see a new low. So essentially, almost all your exchanges are getting absolutely demolished. And so if Binance folds, you're going to see a new low on Bitcoin. Again, the market Bitcoin's essentially been following the market almost hand in hand right now. That's been running in parallel. To an extent, it would have probably actually held up here hadn't the whole FTX drama started, but it did start, and oddly enough, the market it's still been holding very well, which is good to see, because I think it will be leading the pack when we start getting back into a bull market, which will be a while before that happens. But when it does happen, I think Bitcoin will lead the way. But I still don't think it's seen the new low just yet. Now the dollar really watching again. I want to the strong support there. As long as it doesn't break there, I think I'm actually expecting this to break back over the 105 for potentially a new high, because I think our selling is not quite done yet. But we have to see. And now, something I always talk about is don't be going off of technicals. The dollar and the bond events will completely throw your technicals way off. That's what you have to be very careful of. But I think having some technicals is good, but know your events and when they happen. That's why I do supply and demand, because they will typically land in the supply demand zones. But sometimes it just skips right over either a supply or demand zone and goes right to the next one. So you have to be mindful of that, especially when there's events. Events can do that. You can make these huge jumps, and especially in a market like this, it's extremely volatile. So we'll see what happens there. But the dollar, again, I think as long as it can hold the 102 and doesn't break back below that, I don't think the bulls are going to be making a comeback. But it'd be interesting to see if the market runs in parallel with the dollar or does not. There's been some odd movement between the bonds, dollar, and the markets. Sometimes they run in parallel, sometimes they don't. It really just depends on what's going on with the market. And right now, we're kind of getting that. We're kind of in a funky state where the bonds and the dollar and the market just are moving oddly. And so typically that means you're going to get some sort of disconnect, and they're not going to run in parallel when stuff like that happens. So like the bonds will be selling off, the market's pushing up, or the market's pushing up, the bonds are pushing up. I mean, there's all different kinds of scenarios, and it's just right now it's just in that funky state. The market's trying to really determine where it's trying to go from here. And especially after all that news that's been digested, you get a lot of confusion with the bonds and the dollar and everything. So you got to kind of let it just play out. And then once it finds its trend for a couple of days, then you can kind of base your technicals off that. So, all right. So that's where we got with the dollar. Tesla, again, very disappointed in this. Elon said he wouldn't sell his shares, but now he sold tons of shares over the past week. Again, I think his successor is rolling in. So for this one, I'm really, right, the 150 is a strong support for breaks there. Looking at the potentially the 113, there's really not a lot of support here, to be honest, with Tesla, which is not good. Um, again, Tesla really hasn't seen these numbers, but considering what's going on with Elon, like people are losing trust in Elon. So I think the successor needs to move in, whether that's a rumor or not. It would be very beneficial for Tesla to lose Elon. Elon or Tesla's already got a strong established name because of Tesla. Elon can move on from now, and Tesla can still do well. But I think that transition needs to happen quick because right now all he's doing is causing Tesla to just continue to sell off at this point. So, and again, he's got Twitter now, so I think we're going to see that transition on in the new earnings here. I think that will be reported. So looking for the 150 break. If it does break again, 120, this thing can go pretty low. Again, there's not a lot of support. Here's some speed bumps. I'm not saying it can't. It's a very cultish stock. If there's some news event that does happen, this could flip this thing and start pushing back up. That's why you have to be careful and try to short a stock like this because it already is extremely oversold. And so if Elon decides tomorrow that he's given up his slot and the successor rolls in, that could be a very positive sentiment, and it might shoot the stock up 100 points. So you have to be careful of that. And so you can't just short stocks like this because of that. So, and again, it's still a great company. There's just a lot of drama going on with Elon right now. So Apple, another big one I'm watching. 150, this thing breaks. You got to be careful of that. This thing could sell off quite a bit if it does. Looking for the 130 if it does break. So something I want to watch. Again, safe haven, people aren't going to put their money in Tesla because of Elon. So you might see more of an influx into Apple. Apple's had a lot of issues with the lockdowns in China and chips. So there's always that concern there as well. But it does lead the pack. So I'm really watching this one closely, especially going into earnings mode. When the market actually stabilizes some and starts to hold, I'm trying to get back into Apple or hold a bigger position in Apple on that go around because it is a safe haven and it still does extremely well in this environment. So again, watching the 150 or the 135 or 134, if it breaks below that again, could potentially see 130. But again, I think this wedge here, I don't think is the greatest. Again, I don't like these wedges this year, just haven't played out. That's why I play supply and demand a lot. But we'll have to see. We'll see what happens in the next couple of days. But this is definitely what I want to keep on watch. BA, again, very overextended. I don't like this. Still watching that 171 mark. If that does break there, you can get some pretty big selling down to 153. Break that. It's a massive selling, potentially down to the 133 and then the 119. Again, it's starting to lose momentum here. So when it's consolidating like this and it's having a real tough time pushing up, again, very overextended. It's only a matter of time before it starts to sell off. So normally, if I want to buy into BA, I would wait for this thing to come down, at least down to the 132. So it's just being patient, waiting for that to happen because it will happen at some point. It's just you just have to wait for it. JPM, again, all the banks look the same. They broke support, retesting. We'll see if Monday, if we get some massive selling to the downside. So really watching that. Again, if the bank starts selling off, it's going to be more added sell pressure to the general index as they hold a lot of weight in the index. So we have to definitely keep an eye on that moving into this week. But that is pretty much what I got. It's been a very eventful past week. Again, things are going to die down. And we're going to start getting into earnings mode and kind of see how everything's playing out. So that's where our focus is on now. Next 2 weeks, I think will be pretty quiet. So it's not saying we can't move Monday, Tuesday, and then start being quiet towards the middle of the week is typically what happens. And then we'll go from there. And this is also why I do daily updates. If anything changes, I'll let you guys know. So if you made it this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.